Welcome. I am the FX Savant, and I got a question for you. How much would it help you to know exactly where the market is going? Would that improve your trading? If so, do me a favor, drop me a thumbs up. Make sure you are subscribed. We're on a road to 1,000 subscribers. My barber said he'd give me a free haircut if I get 1,000 subscribers, so make sure you are subscribed. And let's figure out where the market's going. Okay, so I want to talk about this little trick. I guess it's a trick because not too many people know about it. I thought it was widely known, but it's not. So we're going to talk about it. How to know where the market is going. This could help a lot of people out in their trading. I really honestly think that this is a missing piece to a part of the psychology part of trading that hinder a lot of traders' progress. So not knowing when to take profit, so they don't know where the market's going, plays into the FOMO. Should I leave it open? Should I close out this trade? Oh man, I closed too early. Oh man, I didn't close fast enough. Oh man, it can continue to go further. These types of thoughts in your head can really hurt your trading. But if you know where the market is going to go, then when it gets there, you have no problem taking profit, correct? Or you have no problem finding a good setup or taking the setup because you know that your risk to reward is on point or not on point. So you don't take the trade, which could eliminate some losses out of your trading and all this. It just goes into a big circle. So the market moves in waves, correct? The market moves in waves. We know the market moves in waves. And what are the waves? What do they look like? If we're in an uptrend, we're making higher highs and higher lows on our way up. It doesn't look pretty. It's not perfect. You may see something like this come down, breaking up higher, but the overall trend is up. Now, imagine if we can take advantage of this section, this section, this section. That's all the best parts of the move, right? We don't want to be in on the retracement, so we don't want to come in when the market is pulling back trying to look for longs in this area because the market's going against us. We don't want to look for longs in this area, the market's going against us. We don't want to look for longs in this area if we're trending up, correct? So we want to take advantage of the moves when they're exploding to the upside. So really shorter moves because less candles, they are covering more ground. So we're in the trade for a less amount of time. We want to take advantage of these sharp moves, impulses to the upside. So we know if we're going to make a strong move to the upside, exhaust a little bit, we don't want to be in the exhaustion part of the move. Why would we want to be in that? We want to be in the next impulse to the upside. Correct. So how can we get involved in these moves? I want to talk about it. Your Fibonacci tool. We have a Fibonacci tool that works wonders, that if you know how to use it, it's really just going to make your trading overall better. I've covered it in a couple videos. I might make another one dedicated just to the Fibonacci ratio tool, but we know that the Fibonacci ratio tool is measuring our retracements. That's why it's the Fibonacci retracement tool. If we take our Fibonacci on the impulse, we will then get information on the retracement, on which level would most likely line up with structure and give us the best possibility for this market to stop correcting itself and start impulsing itself again. We have the 38.2, the 50, the 618, 78.6. Which one of these levels works best is whichever one is lining up with structure. But after we figure out where the market is going to stop and where the impulse has started, what do we need to do next? We need to find out how long the impulse is going to last. So if we take our Fibonacci on the impulse, we have all types of information on the exhaustion, retracement, the pullback, the correction. We get everything that we want to know about this section of the move. So how can we get information on the next part of the move? Well, instead of taking our Fibonacci retracement tool on the impulse to figure out information on the retracement, if we take our Fibonacci retracement tool on the retracement, we will be able to figure out or find information on the next impulse. And the next impulse is these levels here. It's where we want to see the market come to these levels here and complete the next impulse before we start another exhaustion. So how great would it be if you knew the market was going to go to this area? We know we had a pullback in this area, and imagine if you could get in right on the exhaustion, put your stop protected, and having about a 3 or more risk to reward. That would greatly increase your trading, correct? Correct. So let's talk about it in the live market conditions on this Euro SEC position and show you an example of how this actually played out in the live market, because we don't want to be in the trade any longer than we have to, and we want to take our profit and get out of the market and look for the next opportunity. So just knowing where the market's supposed to go can help you with all that. So what do we have to do? We got to start on the monthly. We got to do a full multi-time frame analysis going over structure the correct way You know, that's my favorite. Let me just get rid of some of this. Okay, actually, we don't need to go to the monthly or the weekly. We can go straight to the daily because you all know what it is by now. On the daily, what do we have? We'll go to a little replay mode. We had the market that had just impulsed to the downside. We had broke structure and we impulsed to the downside. After the impulse, what are we looking for? Some sort of retracement, exhaustion, correction, something in order for us to get in on the market because we want to see the next impulse created.
5 hours.
But we know we want to get in on the next impulse. So the best time to get in on the impulse after we get our information on the retracement would be when the retracement has stopped. So let me go back on the daily. As you can see, if we take our Fibonacci from the high to the low of this impulse.
Updates ready to install.
Okay. So we have price that just made an impulse to the downside. We're starting to pull back to at least the 50%. We're getting the structure levels tested. And then what happens? We start to make our move to the downside. So imagine if we knew where the market was going to go from here, how could we take advantage of this move? Well, if we know we have a move to the 50% of our exhaustion, if we go from our correction, we can see that we get a minus 27 on our Fibonacci down here at 10, 14, 41, 7. You should know what's coming next. What am I looking for? Euro SEC. Sell limit. Euro SEC 18615. 18615 right in here. Stop loss up here. Take profit at 10.14.417. So yes, was sent out. So let's go over it. All right, we know that the market is supposed to go down to this area because if we take our Fibonacci from the retracement and we get our minus 27 down here from the high to the low of the retracement, we get our minus 27 down here. We know we can go ahead and plot this out as our take profit. So we know that the market is supposed to come to this area. What can we do with that information? Now that we have that information, we can look for proper entries to find a favorable risk to reward. So 2, 3, 4, 5, and on up risk to reward. If we do that, drop down on the 4 hour, we're breaking structure to the downside. Let's go down on the hour, we're breaking structure to the downside. We've broken this area down in here. We didn't get a full retest. So what if we do, if we take our Fibonacci one more time and we just go from the high to the low of this move down, we can see that the 618 lines up perfectly right with our entry. Of course, this is why the entry is right here. 618 Fibonacci retracement. So if we get a pullback to our golden zone, what would we like to see? We'd like to see the market not break above the highs. So we put our stop above the highs. We know where our target is. Our target is down here at 10.14.417. 417. It's on screen. I don't know why I'm trying to remember it. And then we have a nice 3R risk to reward ratio. This level is really important. And the reason why we put our take profit here is because it gives us the most of what we can extract out of this impulse move. So when I say this level is really important, this minus 27 level is really important. I mean, it's really important to the fact that sometimes it gets touched to the pip at even, and then immediately reverses and turns around. So a little foreshadowing. You see that we get triggered in on this market right here on this candle, and we get respected of this area, and the market starts to break down, comes back, retests our entry once again, gets rejected, and we start to break down lower. But once we get down in this area, we are risk-free. I am risk-free, telling them to go risk-free. We have a little area, price may come back and retest right in here. This should hold and act as resistance. That it does. Let it play out. Bada bing, bada boom. You see, take profit gets touched to the pip, and what happens after? Price starts to reverse till we get to where we are now. But you see, price came all the way down, hit our take profit, hit my take profit to the pip, and then turned around. So I took my take profit right when take profit was hit, and I didn't feel any type of FOMO, fear of missing out. I didn't think, oh, price could go down further, or I wasn't worried about this area right in here. Once price had time struggling to break below it, and once it broke below it, I was still holding. I wouldn't know, maybe I should take profit now. I don't know where price is going to go. I don't know if it's going to go any lower or continue to go any lower after it's hit this area. I'm not worried about that. I take my profit and I look for the next setup. It's 3R added to the bank, and then we roll on to the next one after that. But just knowing where the market is supposed to go makes it easier for me to find a good entry. So I know, hey, if the market has to go here, if I know I'm going to close out here, then I can't look for entries down here. I'm not getting a favorable risk to reward. I have to put my entry and my stop loss where they have to go in order for me to get a good trade, because I know where the market is supposed to go. Apply this to your own trading. Take that and start looking at it. Start identifying where the retracement has ended and where you'd like to see the market go. So we know the market's going down to this area. Imagine if you could get in knowing the market's going to this area. Imagine if you could get in, you knew the market was going to go to this minus 27. You could put your stop above the high, get in on this candle. Nice 3R risk to reward trade. But just check it out, man. Start looking at the market. Start seeing if you can identify these pullbacks and where they're supposed to go, where they're intended to go. And then if you start to understand that and you don't know how to take advantage of it, I do want to invite you, offer you to join my program, my trading program. I have completed my strategy. I've completed one of the strategies, at least. I've completed one of the strategies that I use to take advantage of the market. I would encourage you to go ahead and join, figure that out. Come join the community, come hang out with me, come learn some of the things that I know, how to take advantage of the market in a situation where you know where the market is supposed to go. So even with that knowledge of knowing where the market is supposed to go, trading is still a little difficult. Finding your entries and knowing where to put your stop loss still plays a part into it. But I would like to offer an extension to you as to come join and learn all this valuable knowledge that I have. So how to take advantage of these moves, when to get in, when to exit, where to put my stop loss, where to put my take profit, how I find take profits on different strategies, how I find different entries and all types of things like that. Just all of my knowledge all in one place. I extend this offer to you, encourage you to come join. You don't have to, you can just continue to watch the videos and get some free education that way. But yeah, I think it would expedite any learning curve if you came and joined, but you don't have to. Once again, you don't have to. But yeah, man, that's really much the video. Knowing where the market's supposed to go plays a big role into my trading. It helps me to find better entries, better trades overall, because I can't take a trade if I don't have a favorable risk to reward. And by knowing where the market's supposed to go, if I can't get in with a good risk to reward, I don't end up taking the trade, which most of the time doesn't end up playing out as a winner anyways. So it saves my butt. Yeah, it's just a multitude of things, just knowing where the market's supposed to go and how that helps my trading. But yeah, come join with me, come learn some stuff, learn some free game. But other than that, I hope you're having a profitable day on and off the chart. And until next time, I holla.